Welcome to this episode of the Hidden Money Podcast. Hopefully you've listened to our prior episode on what is tax planning. And being in the industry, Mike and I, we've been CPAs for 20 plus years. We have heard it time and time again of so many questions from our clients revolved around tax planning. So Mike and I got together and we just created a list of the 10 most frequently asked questions from our clients that we hear over and over about tax planning. And this is going to cover, what does it cost? Does it increase my audit risk? So I just want to jump in and reset of kind of what is tax planning. Go back and listen to our previous episode right before this in our tax planning series. We kind of go into more of what is tax planning on a deeper level, but all tax planning is, it's being proactive in your situation, either by structuring, investing, or just maximizing your business deductions proactively in the current calendar year so that when you file your tax returns next year, next April, you can harvest those tax plans, those tax planning techniques. So
let me offer another definition of what is tax planning. Tax planning is you taking charge of your own future and your own finances to make sure the government is not stealing money that you worked hard for. It's rightfully yours. Keep it. You got a tax plan to do that.
Yeah. So tax planning is way different from preparation. Preparation is just actually complying and putting pen to paper on the plan. So develop a plan, prepare your taxes. So Mike, that's the first question, as we get a lot of people saying, what is tax planning? So now, why is it important? Why is it important to tax plan?
Why is it important not to lose your wallet? Why is it important to keep and budget and so you actually have some money left over at the end of the year? Why is it important to invest into your retirement? It's important to tax plan because most people in this world, if they go back, especially if you ever are blessed enough to make over $150,000 a year, if you go back and look at your annual budgets or just run a profit and loss statement, most of us don't do that, but go look at your QuickBooks account, your Quicken account, or just your budgeting meetings with your wife. Go look at that and see what has been the biggest expense you've paid. And honestly, a lot of people don't think they pay taxes, especially if they're W-2. They're like, well, I only consider if I have to pay money at the end of the year taxes. Most of the time, I get money back as a refund. No, if you're W-2, the government has designed it like this on purpose. They are taking money out of your paycheck every single pay cycle. They're taking your hard-earned money. They're taking it out. That's yours. You've worked hard for it. If it turns out to be the biggest expense of your year, which for most people it is, right, Kevin? Mm-hmm. If it turns out to be the biggest expense, that's how you start saving money. Whenever you look at whether it's budgeting, trying to rework a business, going over and taking over a new business and trying to improve it, it doesn't matter. The first thing you do is you start looking at the biggest items that are taking you in the direction you don't want to go. Taxes are most likely your biggest issue. And if you're not tax planning, you are paying too much. I guarantee it.
Yep, and even if you're a W-2 earner, we say it all the time. You're paying, like you mentioned, you're paying that tax silently behind the scenes. And so some people, when they budget, they just budget what the net of their take home is because that's the cash hitting their bank. If you do gross in your budget and then take out your taxes and put that on your budget, you will see that stick out like a sore thumb. You can get some of that back.
I'm just going to go into a little bit of history on that. So it was illegal. It was unconstitutional. If you go back and look at the Constitution, it says there shall be no levy of tax on people's incomes. Well, they changed that in 1913 by amending the Constitution. And at that time, they were only going to tax 1% of people's income and only the richest 1%. And then a few years later, it got to 5%. And 10% of the population, and then it even got higher, and people were revolting. People were going to change the law. They were writing, and back then they could actually just go over to their congressman or their senator's house, or even walk into the White House and say, "Come on, man, stop this." So the government, they're not dummies. They decided, hey, we're going to come up with a withholding tax rule, because if the citizens never see the money, they never get the money, so they never see the money leaving their bank account or leaving their pockets to come to us, they're not going to push back so much. So they designed it. And it works. Go look at they do this man on the street interview or woman on the street interview. You'll find it on a lot of different news channels and radio stations. Every April 15th, they'll go out and say, how much money did you pay in tax? 9 out of 10 always say, Nothing. I got a refund. The government paid me, boy.
Or only a couple grand. Yeah.
It's ridiculous.
Yeah, it is. The third frequently question we get is, when should I tax plan? You should tax plan, and well, everyone's different. So I'll say this. So if you're a W-2 earner, do you need to meet with your CPA on a monthly basis? Maybe. If you're high net worth and you got a lot of moving parts, you might need to meet more regularly with your CPA. If you're a business owner, you may be in the startup mode. You may be 10 years into your business, and you might have a lot of businesses and moving parts. You might need to meet with your CPA monthly, quarterly, biannual. At least biannual. I recommend all of our clients in our firm to always at least go biannual, just because in the summer we want to meet. Hey, how did your January through June go? What are we looking like for July to December? And we're going to meet again in maybe November, October, and we're going to say, okay, how did our projections look midsummer? We developed a plan in the summer. Is the plan still in place? Are we still working it? Did things change? Because life does change, and then we'll figure that out in October, November, and pivot in the last quarter.
Wow, that was a long answer. My partner Kevin is so process oriented.
That's
That's the process. Let me dumb it down a little bit. When should you be tax planning? Sooner rather than later. I hear people all the time say, well, I'm just getting my business going. I'm hardly paying any taxes. I'm hardly making any income. It's true. The tax isn't hurting you now. But what you do today will make a big difference 2 years from now when you start making the money. Structuring now. Understand what it is. You don't have to put as much time into it until you start paying taxes. But if you don't get the structure right, you don't build the foundation right, man, it could seriously, and generally does, hurt you. Makes you pay more taxes than you should be paying.
Yeah, but I still hold true to everyone is different. Everyone is different. You don't need, but you have to be proactive. Either route you go, whether it's monthly, quarterly, biannual, have a cadence and a routine with your CPA where they know your name and not just your name on a page. They know your face, they know your phone number, so that if a tax law changes, they could call you. So that is kind of, everyone's different, but you'll pick out a plan that works for you. Another question we get all the time is this illegal? Like, the things you're telling me, is this illegal? Am I avoiding, or am I evading tax? So there's a difference between tax avoidance and tax evasion. There's a big difference. One's you're going to end you up in jail. What's the difference between avoidance and evasion?
Tax evasion is illegal. That's saying you've evaded reporting your taxable income, or you've evaded paying the taxes you're supposed to pay. Tax avoidance is you being a good steward of what God is blessing you with financially. Tax avoidance is making sure that you're not earning your income in a certain way where you're going to pay more taxes than you should. Tax avoidance is planning ahead of time and structuring your income in ways that you're not going to overpay your tax. Avoidance, 100% legal. It's smart. I believe it makes you a good steward if you're doing it, and quite the opposite if you're not. Tax evasion, don't do it. You're going to jail. I ain't doing it. Kevin's not doing it.
The easiest way to tax plan is evade it. I'm not going to even file my tax return. I'm going to make all this money and not report it. That's the easiest way to tax plan.
Until you go to
Highly
prison.
ill-advised.
Yes, but we get that a lot, right? Like, we'll get a new walk-in client or a consult that makes it through to us sometimes, and they're like, but I get paid in cash and I don't report it. I don't have to report it, right? Yes, you do. How do you think Al Capone went to prison? It wasn't for dealing drugs. It wasn't for killing people. It wasn't for starting gangs and crime. It was because he didn't file his taxes. He evaded filing and reporting his income. Yep. And he went to prison for it.
Yeah, he did. Another common question we get, is this tax planning going to increase my audit risk? So this is a multi-layered question because if you tax plan, theoretically, the Internal Revenue Service will have a threshold of people earning in certain brackets who are audited more. If you just logistically think about this, if you're making $100,000, they're not going to go after 100 people making $100,000 or under, because that's a lot of work and labor for them to drone up some maybe taxes that they're underreporting. They might go for the people making 100 people making $5 million, $10 million, $20 million. Those are heavier audits, but they're going to pull more revenue off that. Just from a business standpoint, that makes sense. So what if we can tax plan and get you under those income thresholds? Then maybe your audit risk goes down, potentially that way. But your audit risk could go up in certain areas because the IRS has a filing history for you. And if you've been a good little taxpayer for 10 years, paying your W-2 and just putting everything on the page and moving on, Then all of a sudden, whoa, Mr. John Smith here cut his income in half with something that might stick out and flag it. But if you're doing everything legally and doing everything defensible with documentation, which we walk through, why be scared of an audit? What's there to be scared of? We'll defend it. And then on that, we're not cheating, we're not lying, we're not going outside the bounds of the code or the law. We're doing everything legally, so don't be scared of an audit. Yeah, your risk might go up in some areas, but it might actually go down. But at the end of the day, if you're pulled for audit, we're just going to tell the IRS, hey, here in the Internal Revenue Code, I did these strategies that the Treasury wrote.
Man, am I passionate about this. I'm going to have to get on my soapbox for a second. I mean, the way our income tax system is created and designed in this country, it's a voluntary system, right? People can go make all cash and not report it. If they don't report it, they might get away with it. A lot of people do get away with it. And then there's always those poor ones that don't and go to prison or jail or lose everything they have. Just think about, why do they put the policeman in the school zone on his motorcycle with his radar gun? They're not usually catching people, although some idiots get caught. But they're doing it as a way to deter, scare people, prevent people from doing it. The tax code is a beautiful thing if you use it for your advantage, but the IRS doesn't want you to know that. That's not how they're designed. They're designed to intimidate the crap out of you. They've been used to intimidate the crap out of people, to political opponents, you name it. They are an intimidating group, and they love that. They live on that. They feed off of that. That pisses me off. The tax code is there for you and me and Kevin and all of us to make sure we're paying our fair share, which is your legal obligation, your constitutional obligation, your patriotic duty. But it is not any of those to pay more than you should. And the IRS scares people into paying more than they should. I can't stand it, Kevin, when we get a client, we show them that is a deduction you should take. No, I don't want to do that. I don't want to get the IRS noticing me. Oh, yeah. That is you're choosing to tip the government if you're doing that. So what Kevin said is right. It's no fun to go through an audit. Have someone else represent you, but don't be scared when an audit comes. Just make sure you have done your tax strategy or tax compliance in a way that, one, mitigates risk of getting audited, but two, if you are audited, have that audit defense file built by your tax preparer, by your tax strategist, as the tax return is being completed and filed. Have that audit defense there. You shouldn't wonder, hey, if I get audited, am I going to be in trouble this year? If you are, you need to talk more with your CPA or your tax preparer.
Yeah. And to give you a little example here, we just had a client of ours get audited.
A famous client of ours.
Yeah, and here's the process of the audit. I'm the process guy. He got a notice. He sends it to Kevin. I get power of attorney. I handle the initial interview, the documentation. I need him to clarify some things in his accounting file. Took him 30 minutes to an hour. He never once talked to an agent. I run interference. That's my job. I'm to keep that agent away from my client. I have to keep that agent in his box and not let his scope go out. That's my job. And then at the end of the day, the client talked to the agent 0 times, and we got a no change report. And he did aggressive tax planning. He made $1 million that year. And he bought some real estate, and he saved at least $200,000 in tax that year. And I went into that audit confident because we had our documentation. Everything was in line. And from the client's perspective, he didn't have to do it. He got the initial audit. His heart sank a little bit, and then he's like, "Here, Kevin, deal with this." I got power of attorney and handled it, and then say, "Hey, no change report's coming in the mail. You'll see it. Let me know when you get it."
That's how it would be done.
Done.
An audit is just you getting the opportunity to prove that you're not cheating. Again, don't cheat. Don't commit tax evasion. Use the tax code for your benefit and be able to prove that you're following the law, and it should feel good. Hope you've been enjoying this episode of the Hidden Money Podcast. More importantly, I hope you've been learning some value. Taxes can be one of the most beneficial assets in your pocket. If you already have a good tax strategist, that's wonderful. Work with them. Use our podcast with them. But if you don't, or if you have questions and you're wondering, is it time for you to take the next step? Check us out at revotaxpayer.com. Again, that's revotaxpayer.com. Kevin and I have built an amazing team that does this stuff in each of our episodes, day in and day out. We don't think like a normal CPA. We're not just plugging numbers and getting your tax return done. We are changing your life by helping you change your facts to change your tax. Again, that's revotaxpayer.com.
So how much can it save me? We hear that a lot. Someone will come in and be like, I never tax planned. How much can it save me? Where do you even start?
First question you should ask, how much are you paying in taxes? Oh, I pay, we were talking to this guy, that barbecue thing. He says, I don't pay much in tax. I'm only paying 35 to 45%. Like, what?
And he's like, it is what it is. He said that multiple times.
We tried
We're like, change your mind.
Sometimes you can lead a horse to water, man. No
He's
offense,
just conditioned. He's
yeah.
like, it is what it is, 35%.
But he doesn't need to pay that. He was paying substantial amount, over 6 digits in taxes each and every year. He didn't need to pay all that. So technically, you can save all the taxes you would pay, 100% of them can be saved. Now, in reality, it doesn't always make sense. Like, some people, I hate this part too, CPAs say once a year, hey, the same strategy each and every year. They call up in November, the client calls the CPA, says, what can I do to lower my taxes? We're making a lot of money. Do you need a new truck? Do you need new equipment?
Go buy that depreciating asset.
Go buy that asset. It's going to go down in value the second you drive it off the lot, and it'll lower your taxes. You could buy a whole bunch of trucks, get yourself in trouble, and pay zero tax. But there are things you can do we've got clients making over $1 million a year, legally not paying any tax year after year after year. They stand up to audit, or very little. So it's a hard question to answer. It depends on what you want to do, what your deployable capital is, how complex or not complex. The more complex your situation is, the more opportunities generally exist. But yeah, how much can you save? Ask this first. How much am I paying in taxes? You can save all of that, or a big portion of it.
That's a good point. And where to find your taxes, pull up your 1040, go to page 2 of your Form 1040, and not look at your refund at the bottom, go to total tax. That total tax amount is how much tax you are paying, whether it's the withholding or estimated, refund or owed at the end of the year, doesn't matter. Go to page 2 of your 1040, look at total tax. That is what we're attacking.
I just want to reemphasize what Kevin said. Don't look at your refund or how much you had to pay in April. That's not your tax bill. It's hidden in there. If you get a refund, that means you lent money to the government for zero interest. Man, that is awfully nice of you. Good job.
Yeah.
Thank you. You lent them your money that could have been earning you money for free.
Yeah.
So anyways, look at the total tax paid, because it is buried in there, and a lot of people don't even know how much. Check it out.
Yep.
Towards the top of page 2, it says, this is your total tax. That is your amount. That's how much you could save.
Yep, the lower we get that number, the more withholdings refunded. So maybe we've convinced you. Our whole life mission here, we have several life missions, but this little stage of our life that we're in here, we're trying to change your mind on how you view tax. So if by this time we've convinced you, yes, I'm ready to get a plan, I'm ready to get started, what do I do? Well, I'll tell you, the very simple answer is go to revotaxpayer.com, click that link to schedule an initial interview with us, and we'll kind of just walk through your details. We'll tell you a little bit about our firm. That is a very good step. The second one, let's say you're not comfortable working with us. That's okay. Hidden Money's here for your education and your support. Share this with your CPA.
Please.
But be communicating with your CPA or the CPA's team that you again, going back to how often, have that cadence. Get started with them saying, hey, in the past, we've had a preparation engagement where I hand you my documents, you give me a tax return every year, back and forth. That's not a relationship. That's just a document handoff. Get a relationship with your CPA, and if you don't have one, we can be that for you.
And it's okay if you have one that you love, and you're having to bring all the tax ideas to him or her, and they're telling you, yeah, you can do this, or no, you can't. First of all, if you're having to bring it all to them, what value are they adding? Except helping you do your own tax planning. Even if that's the case, God bless you, you're doing it. You're starting to do tax planning. But if you're the one that found that, how much are they learning for you? That's what their job is. Then again, learn from our podcast, take it to your CPA, get it done. There's so much out there for you to do, for you to save your money, for you to keep what is rightfully yours.
Yep. So now, let's say I'm interested. Now the next stage of the question is always, okay, I've always prepared, this guy prepares my tax return for $500 a year. And they come to us and I'm like, $500 will get you a very minimum prepared tax return.
At H&R Block.
At H&R Block. The times have changed. So what does it cost?
It all depends.
It's a loaded question.
I mean, it is a loaded question. A lot of times when we start on a new prospective client consultation or call, that'll be the first question they ask. I'm like, I don't know what's going on with you. It's all based on either how much time we're going to have to spend on it or how much taxes we're going to save you. What it should cost is a good bit less than you're going to save in taxes. Most of our clients, we want at least a 3-4x multiple in that first year. A lot of our clients are getting a 10-20x, which means they might pay us $10,000, but they're saving $100,000 or $200,000. It does cost money, I'm not going to lie, and we should be right on that out of the gate. You're going to take whoever you go to, if they are good at what they do, that's valuable. They've put a lot of effort into it. That's the way they're going to put food on their table. They're going to charge you money for it. But if I told you right now, guaranteed, you put $10,000 into this investment and you're going to get $70,000 back in the next 8-12 months. And it was guaranteed. Would you do that?
Yeah.
How many times
100%.
did you do that? I do it all the time.
Yeah.
But it costs money. So generally, I mean, like our lower tax plans, some of our lowest ones are like $2,500 just for the initial strategy call or doing quarterly strategy, right? And then we've got clients where we're saving over $1 million or $2 million in taxes, and they're paying us like upwards of $100,000.
Yeah, I have a client I'm speaking with tomorrow that I'm going to be developing pretty much a $35,000 tax plan for him. Now, he's a high income earner, and this is potentially going to save him probably $500,000 to $600,000 in tax, and it's a lot of work. So that's going to be kind of the plan set before him, and it makes sense. So I try not to focus on the cost, but focus on the value. And a lot of time, yeah, like just to give you two other strategies that we have. If you're interested in real estate, we have a real estate package that shows you everything customized to you for $7,000. And that comes with communication with our team for the year. That comes with the tax plan. That comes with everything. And you walk away understanding real estate taxation in your situation, maximize to offset your W-2 or your self-employed income. Then it comes with support and execution from our team.
There's my partner. Always be selling.
That's right. Then we have self-employed. If you're self-employed, we have a $6,500 plan there that is going to be everything from self-employed individuals, structuring, deductions, retirement, family, legacy, all of that for $6,500 with support, communication, meetings, and everything included in that. That is different from preparation, but just planning, those are two of our most, I guess, popular packages. The third one is going to be just it's a Q4 kind of strategy to where if you're listening to this in November of 2025, there's something you could do today. We will teach you those things at no cost, no obligation up front. And then we will go through the fee structure in that meeting, but that's something you could do now.
Basically going to pay us a percentage of what we save you, 10% if we're doing the leveraged charitable organization. So it can, if you go to a bad tax strategist and come up with a bad tax strategy and you pay that person more than they're saving you in taxes, that is no bueno. Don't do that. Don't go back. Ask them, get them to verify what is the value you're going to provide me. But let me tell you what else would cost something. If you don't act, if you don't do tax planning, guaranteed you're going to overpay your taxes if you're making over $150,000, $200,000 a year. Guaranteed. So what is the cost of not acting? It's a guarantee. What is the cost of acting? Potentially a multiplier. So whatever you spend, you save 5x, 3x, 12x, 25x. That's how I consider the cost.
Yeah, and we could do a whole podcast on what does it cost. Because even our fees are deductible. So if you're self-employed or you have a business or a rental and you're paying us, that is deductible. The government's picking up 37% of our tax.
The government is subsidizing you to pay us to not pay them as much. I love America, and that's the way it should be. They've made it so complicated, they ought to pick up part of the bill.
Yep. So how often should my planning be reviewed? And I would say, going back to the original, that cadence, every time you meet with your CPA, we are saying, here was the plan, how is it going? So it needs to be reviewed at least twice a year for most people.
All right.
Some people who are very high net worth hands-on, you're going to get more of that touch throughout the year because you might have things moving around more frequently. But the majority of the population, they go to and from work, they're W-2 earners, they have one strategy set. We hold them accountable throughout the year so long as they meet with us.
Yeah, tax planning involves coming up with what you think is going to happen over the next year, 3 years, 5 years, and coming up with a plan and a strategy to maximize your tax benefits on that. Well, if something changes in your plan, you make more money than you thought, you started a different gig, something like that changes, you didn't make as much money as you thought, you need to reach out to your strategist strategist and revise and see how your tax plan goes. Another big one, thankfully it doesn't happen all that often, but it does happen, and we love it when it does. I know I do. When tax law changes, we have got so many cool strategies we developed with our clients 2 years ago. The tax law has changed their tax plan, and they need to capitalize off of the new stuff. So as often as things change, at least once or twice a year.
Yep, and the last question we hear a lot is, how can I make sure I'm not overpaying my tax? How can you make sure you're not overpaying my tax?
There's only one way, and that's to do tax strategy, tax plan. Here's how you can make sure you are overpaying your tax. Don't tax strategize. Go to that cheap CPA who's just taking your stuff in and pulling out a tax return. Go to H&R Block. I mean, some people that makes a lot of sense. If you're making over $150,000, $200,000 a year, definitely if you're making over $300,000 and you're not strategizing tax, you are overpaying it. Guaranteed.
Yep, yeah, that is a guarantee. If you do nothing, if you're idle, you're overpaying, period. Even if you have a strategy, that strategy needs to be reviewed on a routine basis, checked against current tax law updates, all that stuff to make sure it's up to date and you're maximizing everything you can.
Yeah, you have a great strategy came up with 3 years ago, your income's now twice as much as it was. That strategy probably very likely needs to be changed.
I mean, where else in your life do you just come up with a plan and set it for 20 years? Like, I have a will, but my life has changed. I had an additional kid come this past year. I have to revise my estate plan. I buy a new car, revise my insurance. You need to be constantly looking at every aspect of your life on a routine basis, and taxes shouldn't be any different.
Especially when they're your most expensive
Yeah.
outflow of money in your family.
Yeah, and so that's kind of the top 10 of the most frequently asked questions we get whenever we talk with clients, and we've heard them over the years. We could do a top 100. There's so much questions you have, and everyone's situation is different. You might have different questions, and that's okay. We would love to answer them. You feel free to leave a comment in this video. If you're watching on YouTube, put a comment. We'll read it. We'll get back to you too if you have any questions of what tax planning is. But thanks for joining us this episode. Please like, comment, and subscribe, and we'll see you next week.